Hello. Thank you for tuning in to this week's Stock Talk episode. I am Lisa J. Stocks. I want to start off the show by acknowledging Vincent's first super chat of the day. Thank you so much, Vincent. And as he noted here in his note, let's acknowledge all of the veterans. Veterans Day is 11/11, coming up in just a couple of days. And actually, my dad was a veteran. So thank you for that reminder, Vincent. Thank you guys for tuning in and chatting. Let me go ahead and take this down. Camera. Okay. So today I have the fear and greed meter showing down below here. Last time we looked at it together, I think we were at about 27. We were in the fear range, but now we are officially in extreme fear. And what that means is for the stock market is that investors are going to be nervous. They might be sitting on cash, selling out of positions. We're going to have to deal with higher volatility. And during these type of time frames, those defensive stocks may outperform tech versus, those growth stocks. But historically, we always have to remember we have a long history to reflect back on. These times are followed by a rebound. And so we have to stick to our plan, whether you are a hands-on investor or you are just looking at your 401k and just hate the way that it's looking, going down, down, down every time you look. But we have to just realize that we have to be ready for these times, not panic, stick to our plan, keep on investing, evaluate what you are investing into. That is important. Not everything is going to recover and rebound. So make sure you're doing your research, making sure that you are having things in your portfolio that are either ETFs or true blue chip stocks that you have done your research on, that you're keeping up with their financials and are able to have in your portfolio and sleep well at night and know that these are truly investments that you can hold for the long term. And so just keep on evaluating your plan. Some of us have a portfolio that is just very much, a set it and forget it. But if it's not, if you are investing into individual stocks in different sectors that really might have huge swings, be ready for that and be ready to keep on evaluating and making changes if needed. And so I'm going to talk a little bit about, let's see. Hey, Nora. Hey, Anthony. Thank you guys for tuning in. So, as I was saying about, different times that historically, when we're dealing with this high volatility when it comes to the tech stocks, there are some defensive stocks and other things. That may be able to thrive. But in the long run, I'm going to be sticking to my ETFs. So, not that I'm going to be sticking to my ETFs. I'm going to be relying on tech, relying heavily and leaning towards tech. So, let me talk about diversification. I've been investing into the S&P 500 with FXAIX, for example. VTI is a total US stock market investment that I have. And so those type of funds are weighted by market cap. So automatically, you're going to be getting the highest exposure to NVIDIA, Apple, Microsoft, Google, those type of companies. So even though you're getting a mix of all of the different sectors in there, you're getting a higher percentage of technology. And some people, they don't want, they think that that's not true diversification. But for me, I'm okay with it because that's the diversification that's actually where the growth is. So I put in VOO as an example to see, an S&P 500 breakdown. So we're getting 34% technology, 12% financials, consumer staples, about 10. But yeah, funds like this, you're going to be highly weighted into technology. And then usually probably about 36% is going to be in those top 10 holdings alone. So we are spreading our portfolio is giving us exposure to different sectors, but it is going to be highly weighted into tech if you go in this type of direction. Together, yeah, as I said, those names are going to be over 30% of the weighting when you choose these type of funds. And so some people sometimes ask me a question of, Lisa, I want to make sure that I'm, getting exposure to other sectors. And like I said, during certain time frames, they can thrive against the S&P. But for me, I'm still okay with leaning more into tech because I'm thinking long term. Just because there's a certain 6-month time frame or even a year here and there where they might beat tech because it's kind of beaten down. I'm thinking, over 5 years, 10 years, that let's see, just adjusting my mic, sorry. That's that is my focus. Not I'm a long-term investor. I'm going to be holding for some time now, and so let's take a look at some comparisons that I was trying to put together here. When you think about tech, all right. So on this comparison here, I'm taking a look at uh, high tech. SMH is a semiconductor. QTM is quantum stocks. SPMO, that's a new addition to my portfolio. That's a momentum ETF. So I'm just trying to take a look at these as compared to just the plain, let's put VOO in here also for just a regular S&P 500 investment. And so looking at this, those specialized like SPMO, it focuses on the top. It focuses on 100 of the S&P 500 investments that have the highest momentum score, for example. And then SMH is semiconductors, quantum, FTech, that's a technology, fidelity funds. So all of these funds are outperforming VOO, which we just looked at, which say it's highly tech. I mean, not everyone in that top 10 are tech. We have Amazon up there probably, and let's see who else. We have Meta and Meta, Tesla, Amazon, which are highly tech, but not classified there. Those type of companies. But when you focus on a higher when you get into a fund that is even higher tech than the S&P 500, the growth, this is year to date. If we go out even further, let's go out to 5 years. Every single last one of those funds have a higher rate of return than just being into the S&P 500, which is highly tech. But by getting even more exposure to tech, your returns are going to be more significant. So now I had another comparison going on here, and this one has more funds that are defensive, a mixture. So I put in VHT, which is the Vanguard Healthcare ETF, SCHD, the Schwab US Dividend ETF, let's see, Utilities Select Sector, which is XLU, as well as VOO, just to keep a measure against the S&P 500. And so in shorter time frames, I have it on 3 months right now. VHT, the healthcare one, is actually leading, but like I said, I'm thinking long term with my investments. If we go out to the 5 year, we see that VOO is leading, and all of these other funds, the performance, it doesn't, it's not as long lasting of a trend of being on an uptrend to give you that growth long term in your portfolio. So, I mean, the choice is yours. Do your research, find out what funds you're comfortable with. If you absolutely feel that you need to have a higher exposure, or a more equal exposure to healthcare and consumer staples and all of these different things in your portfolio. But I'm leaning more towards just staying with an S&P 500 or something like that is highly tech. And then from there, I'm going into funds and investments that give a higher exposure to technology or just have a different slant that is going to beat the S&P 500. I already have a substantial foundation into FXAIX, for example. And so right now I want additional growth, and I don't feel that I'm going to get that long term by going into other sectors or even leaning towards dividends as far as incorporating new investments into my portfolio. So, guys, let me know your thoughts on what I'm sharing. Nora is sharing that it's been a rough week for her. I'm assuming some options trades did not go your way. Lisa, what percentage is your long-term account down this week? Oh, percentage? I couldn't tell you percentage-wise off the top of my head. And I have all of my portfolios separated, so I couldn't tell you that at a glance, I don't think. But yeah, it's significant. I recently did a video sharing that I got to over 100K in one of my portfolios. I was just over it when I made the video. I think I was like at 100,000, maybe 800. I'll use that one as a quick example. I'm down to 98. I know in no time it'll be back over 100, but that's the way the market is. It has had a pullback right now, and it has allowed me to add some things to my portfolio that I was working on, some Meta, some more SPMO. I had limit orders set, and even the days when I was busy going about my business and not actually watching the chart, or maybe even missing an alert if it did come to my phone, those my limit orders filled. And so from there, if I looked again and it came down, if it still was even lower than where my limit order had filled, I could add more to my portfolio, and then take a relook at the charts and see if it's time for me to set new limit orders. But yeah, I'm still building. I know that unless I was close to retirement, about to need to tap into these funds, I right now I'm just thinking I'm in the building phase, and that's why we need to, as we get closer to retirement, be ready to make those shifts. But right now, I'm just trying to just ride out the wave, deal with the ups and downs of the market, and then be able to look back on times like this and know that I put the work in and I stayed on track with my plan. So Yes. So I think you guys get the point that I'm trying to make. Diversification, I think is important. We don't want to be, completely 100% into tech or healthcare or anything in particular. It's good to incorporate diversification. And for your peace of mind, you may like to see that some of the investments in your portfolio are doing better than others, but uh, with the balance that I have in my portfolio, even if it is just, with the S&P 500 investment, which is going to be pretty much a foundational investment in my portfolio, I'm going to, there is a pullback, I'm going to see it and I'm going to really feel it in my portfolio. And you have to realize the larger your investment portfolio gets, the bigger obviously those percentage swings are going to be. And it's hard to see, but you have to just zoom out, realize where you are at in your investing journey, and so you're not overly stressed about uh, what's going on in the short term, because you're not at the end of your journey yet. So okay, so guys, let's see. So let me know if you have any questions, comments, any funds any ETFs that you'd like to take a look at or make a comparison of, and we can try to take a look at that. So let me go down and check what's going on in the chat. Yeah, got to take the good with the bad on those days. Yes, yes. So have you guys been taking my poll questions and little quizzes and stuff that I've been putting on my community page wall? Let me know if you enjoy those. I wish I could put some in ahead of the live and just click on them as opposed to having to do them in real time, because I just it's a lot. It's a lot to keep track of when you are live. Okay, so Anthony says he's enjoying them. Thank you for the feedback. And thank you also for the compliment on the background that I'm using today. Something different. So, guys, if you truly, want to do some research and find some other funds that are not so tech heavy, let me know if there's any that you would like me to do a deeper dive on. If you're a community member, if you are a channel member, I can, prepare a post or give some insights on some, just to give a breakdown. And just everything that I'm sharing here, guys, I'm not investing to everything here. I was using these for reference, so that you can see just how things perform against each other. Another thing I'm always reminding you guys to take a look at is the expense ratios versus the performance, to make sure that that balance is in line with your goals and what you think is reasonable for your investments. Healthcare industry would be interesting. Okay. Okay. Good afternoon, Tim. So, guys, if you're not already, make sure to, if you're enjoying this conversation, if you like hearing about stocks, budgeting, all things money, subscribe to the channel. And I gave a few reminders this week. Do you guys make sure to, outside, I know a lot of us might just be contributing to our 401k through our paychecks, so you're all set there. But if you are investing outside of that, or if you are building on your savings, if it's not already automatic, are you setting a day in order to make sure to contribute a deposit? I gave a reference of whether it's funded Friday or transfer Tuesday. What is your day that you are keeping up with building up cash for future investments, building up your emergency funds, building up your trading account, wherever you need to add to? Do you have a day of the week or a certain set time frame during the month to do that? Is it automated? Are you keeping up with it? I'm giving you a reminder before we get started with this another new week where we are potentially going to be facing more volatility. What do you want to be ready for? Do you have holiday expenses that you have not fully have money put aside for? Are you still working on building up that emergency fund? Do you have credit card debt? Whatever it is. So Anthony is giving 2 ETFs. You just want to see those 2 ETFs against each other? Let's see, duplicate tab. This SWP, that one sounds familiar, but I don't know it off the top of my head. I'm sure I will know it when I put it in. So, oh, this is a Schwab. Okay, so let me add this back to the stage. All right. So Anthony asked for a comparison between the Schwab, just regular plain old S&P 500 versus the Schwab crypto ETF. And do you see those orange lines there? Those are the performance of the crypto ETF versus just the plain old S&P 500. I know it's very small on your screen, but we're trying something different today. And so over the last 5 years, the crypto, well, let's see, we have different time ranges because that SWPPX has not been around for 5 years yet. But we can look at the year. The range alone is quite impressive. Over the last year, the crypto ETF is up 95%, while the S&P is up 14.9%. So if you are a person that wants to have crypto in your portfolio, I have crypto in my portfolio. I have Bitcoin, Ethereum, I have FBTC over at Fidelity. The growth is substantial when it comes to those investments. But you also can deal with huge swings. I do not have a stop loss on my crypto. I plan on holding it, but at the same time, because I've been through it, seeing it go from 60,000 down to less than 20 and now back to 100. I have to put a reasonable amount for my sanity into those type of investments. It's not nearly as significant as my basic investments like a VTI or even, say my Apple and Google and those type of growth stocks combined. If I had the stomach for it, I would probably have a much more substantial portfolio if I was more heavily into crypto. But it is what it is. Everyone has to make their choice. Yes, I use Fidelity, so I'm assuming that this fund is is basically just like I have my FXAIX in my portfolio. Okay, let me go back. Oh, Anthony, I'm calling it the regular old S&P 500. Yes, it's just the vanilla ice cream at the bottom, you know? It's just the foundation that you pour before you start building the house. Which is nothing wrong with that. I have a lot of it, but right now I'm trying to do, those fancier things, those higher growth potential things and smaller allocations to build up. Okay, so Tim is sharing that he's trying to finish maxing out his Roth IRA for 2025. I am not sure how old Tim is, but guys, if you the numbers are going to be changing for next year. I have not gone over that in any of my Sunday lives, but if you are under the age of 50, I believe, you can contribute $7,000. My daughter has her own earned income now, and I am encouraging her to get to open up a Roth IRA. Hopefully, we get that done this week. And I have a channel member and her son that also want to do that. So I'm probably going to see if I can set up a time this week before, during business hours in order to have us get together and work on opening up those accounts and, going through the steps of linking it to bank account and all that good stuff and figuring out what are we going to be allocating? What are we going to be investing into? Lisa, did you add any extra money this week to buy stocks very low? I did not add extra, but I have an account. I have one of my accounts that already has, I pretty much have a pretty significant amount of cash in. So if I have a go-to place. If I'm lacking in a budget in any portfolio, I know I can go to this one in order to invest. Even though it is a retirement account, it's not a taxable account. But I added to my taxable accounts. Yeah, so this particular account, it's about 50% in cash right now. So that is a place, oh, excuse me, that's if there is a particular investment that I just feel that I have to have exposure to, and I can just go there. If not, I like to have the money there ahead of time. I don't, even though I have instant deposits, I like to have the money already there and, available to me immediately. And thank you for the bless you, Anthony. I wasn't going to try to scramble to do the mute button. So excuse me, guys. Thanks, Kevin, for sharing me out. Okay. Guys, let me know if there's any other funds that you want to take a look at. What books and or content do you recommend to get started trading? I don't have, I'm sorry, I don't know the name of, I couldn't give you the name of a few books on trading off the top of my head. But I can tell you this, if you're referring to options trading, I am a member and crown trader in Keenan Grace's Discord. And so I have an affiliate link for that if you want to check that out. As far as content creators that I look up to, Keenan is one of them. Also, Larry Jones, Stocks with Josh, Chris Sane. Okay, Anthony is looking for a book recommendation for us. I can see the cover of a particular book that I want to mention, but I don't know the name of it offhand. Sorry about that. Okay, let's see. All right, guys. So let me know if there's any funds or Doc Mo as well. Yes. Okay. So what volume profile? Yes. I think that's the book that I'm trying to think of with the green cover. So let me put that up for a second. And uh J Lee, I'm not sure how to pronounce your name. What is it that you want to look at with VXUX? I think I did a video on that before. A mini video, just a portion of yep, volume pro. Okay. So let me put that up for a second for the person that was asking for a book recommendation. And let me pull up V. Okay, guys, I'm sorry I'm being quiet. I hate when when I have dead air going on the live. I will just pulling up this fund here. VXUX. V. Okay, so take that down and let me put the camera back. So I pulled up VXUX versus VLO, and the rate of return over a 5-year time frame is about double. We have 57 versus 106. Over a 10-year, we have 208% rate of return versus 112. And so this is the Vanguard Total International Stock Index Fund, ETF. So some things you can compare it to. They're comparing it to VTI, VLO, a small cap fund, SCHD. I don't think any of those are really, there must not be anything that those are not good comparisons because this is an international fund. So let me see if I can get the a little bit more of a this is one that I think when looking at it over those larger time frames, seems like it is worth it. One of those by having so much more exposure that you can unlike with just the US, you're getting the sectors and the different countries, and so see. It has an expense ratio of 0.0%, and it is a large cap international fund. You get exposure to over 7,500 stocks globally by investing into this fund. Top holdings that might be familiar to you are Taiwan Semi, Samsung, Toyota. And seems like this fund is very established. It's been around for years. We have over a 10-year history we're able to look at here. And this chart that I'm using is stock analysis. As I also pulled up earlier, we were looking at this is etfrc.com. Just to let you know, if you guys are doing any quick research or want to, just look at the top holdings and just some quick details on a fund, you can easily look at them on these sites, as opposed to like having to go to Schwab to look at a detail, go to Fidelity, things like that. But the ETF one, it has to be, it doesn't do a mix of, I don't think it does a mix of the mutual funds as well as the ETFs. So I said 7,500. According to this site, you're getting 8,707 different holdings in this investment. And it must be very diversified because you see the top holding is only 3% of the entire funds, and then it already shifting down to 1% and less as far as the exposure. So extremely small percentages of all of those different companies here. Okay, thank you for tuning in, Trenton. Okay, so Jay Lee is sharing that they have a significant portion of their portfolio in this investment. So, yep, just stepping it up instead of just being, into a VTI or VOO. This is the total international fund. Can you show how to put in a stop loss? I would need to have some screenshots. I don't have a way of like sharing my screen. I do that type of thing right off of my phone. Usually in Webull would be the site that I most likely would be doing that, because that's where I would that's where I have my growth portfolio, but that's also where I do all of my options trading. And so if there is any stocks that I'm going to dabble into as far as a trade or something that has not fully proven itself, graduated in my mind and the technicals of being just in my portfolio with no stop loss on, that's the portfolio it would likely be in. So that's something I would have to prepare ahead of time in order to show you guys. And every platform is going to be a little bit different. And so maybe I can try to show you on just two that I have. Vanguard does not currently offer its own crypto fund or allow its clients to trade third-party crypto ETFs on its platform. Okay. Yeah, there are some limitations. That's why I added FBTC because I had a particular account at Fidelity that I wanted to have some crypto exposure into, and that was my option at the time. But um, I have my own account on Webull or Webull Pay, you might call it, with that holds my other Bitcoin and Ethereum and other cryptos there. I have other accounts, like I have crypto.com and Coinbase also, but I really haven't had the need to use them because I don't invest regularly into anything that's kind of obscure, not mainstream. So I haven't had the need, but I like to be prepared in case there is something. Okay, so I made a community page post asking for questions for the live. I will try it again this upcoming week. If you guys have any questions, funds that you want to look at during the live, but yeah, I there was only one time I've done. I think it was back in January. I did a Q&A show, and I don't. I like to have my topic. I like to have at least I like to know what we're going to be discussing. I don't like to be dependent on the chat, so there won't be any total Q&A shows. I like to leave time and a segment for that. So this is your time now, guys. If you have any other funds, questions that you want to share. Quantum. In my chart here, I did have a quantum fund. Where is it? You guys still seeing the screen? Yes. QTUM. I think Anthony probably invests directly into all quantum stocks, but that is QTUM. Can I put it here? Put it here. I do not have this in my portfolio. I have not dabbled into any of the quantum stocks. But this is a way of gaining some exposure. I think Rigetti is having their earnings this week. I posted the earnings calendar, I think, this afternoon. So D-Wave, Rigetti, IONQ. So over the last 5 years, this is up 200.87. And that is a measure that I usually try to say, if I have an investment, at a minimum, if we push out to the 5-year time frame, I want to be 100% or more. And right now, the S&P is dragged down. It's 87.5%. It's usually at least about 100%. But looking at it against that quantum ETF, which is up 200.87%. But you have to be ready for. It's moving pretty close in line with the S&P actually, but always thriving except for back in April, it dipped harder. Well, let's put this into the fund and focus to see if the funds that Anthony is mentioning are at the top of the list. So I see IONQ there. QTOM, let's see. I'm not sure what the company name is for that other one that you're mentioning by the ticker. Oh, that's another ETF. QUTM. Okay. Is that a preferred one to the one that I was using as an example? Is it brand new, Anthony? Yeah, it looks like it. But these type of funds are giving exposure to research and development, commercialization of systems and materials used in quantum computing. If that's something you want to have exposure to, you can take a look at some funds if you want to, like this one, or from there, take a look at the top holdings if you want more direct exposure and research those companies. Intel might be the one that's most familiar to everyone in the chat. Okay, let's take a look if there's any more questions or comments. Oh, wait a minute now. Wrong button.
Thank you so much. We do greatly appreciate it.
Thank you to a brother of a certain age, as well as my channel member, Joe Delaney, aka Thrive and Glow with Joe, for those 2 super chats, getting me closer to my goal of the day. And so, again, Vincent started off with a $4.99 and reminding us to acknowledge our veterans, which Veterans Day is coming up in 2 days. All right, so guys, make sure you gave the live a thumbs up if you have not already. If you're not subscribed, subscribe to the channel. Leave me any comments, questions, video requests, live stream requests, topics that you would like to hear from me about in the future. And let's see, is this person giving me a ticker they wanted to look at here? Let me see if I can pull it up before we wrap it up. Oh, you guys are seeing my screen already. Yes, this is a cannabis ETF. It's looking sad on the 5-year, down 85%. Year to date, up 3.7%. Well, I'm sorry, over the last year, up 3.7%. Year to date, up 10.24%. Down on the month, over the last 6 months, up 61%. But then it's come back down. Let's see. Yeah, doesn't look like anything that I would. It's over the year range, $2 to $6. Let's go down to the financials. Are there any financials in here to even see? Oh, it's an ETF. It's not going to show the same, Lisa. Yeah, doesn't look like anything that I would probably bother to have in my portfolio. This is why I'm saying I am very tilted towards tech for that steady growth. Yeah, you can't really see much detail on that one. Hey, Eric. Okay. All right. So, kind of different this week. Just wanted to just chat about diversification and just show you a few resources that I usually jump to in order to do some comparisons. And yeah, for right now, I'm okay with high tech exposure because I'm really trying to grow my portfolio. And in time, if I'm paying attention, I'm in tune with everything. So, in time, if I need to rebalance and evaluate my plan, I'm ready to do that. But for now, I'm trying to grow. I'm trying to build. I'm trying to in a safe way and not necessarily all individual stocks like you guys who have been following how I've been building up my SPMO position, for example, and as well as FSPGX over at Fidelity. These are just a couple of ways that I am aiming to obtain higher growth than just, as I said earlier, that plain old S&P 500. So FSPGX is the Fidelity Large Cap Growth Index Fund. So this is one that I'm adding into one of my IRAs. Let's look at the 5-year. So not as compared to SPMO. Over 5 years, SPMO is up about 140%, while the FSPGX is up 117. And I think we already looked at a little while ago that VOO is up. Let's see. About 106 according to this chart. So a little bit more growth potential than what I currently had in my portfolio. Higher expense ratio for the SPMO, and I think the FSPGX is pretty much in line with like my FXAIX. It's if anything, it can't be more than 0.04%. So, but it might be even lower. I don't remember off the top of my head. Okay, well, guys, I don't know what football game is on currently. Let's go have dinner, go enjoy the rest of your day, go watch some football, and thank you guys for making time to tune in to this week's Stock Talk episode. Leave me some comments on my posts and my polls and quizzes. And if there is anything that you would like to see us chat about in the future. And thank you guys for tuning in. Thank you for those who have super chatted today and supported and been sponsors of today's show. And I will see you next week. Stock it up, stock it up.